In today's video, we'll look deeper into the CTKS cheat sheet, namely the DXY, the S&P 500, Bitcoin, Total, Ethereum, Solana, BNB, and XRP. Please let me know in the comments what future cheat sheet charts would you like to see in future videos. And let's run the numbers. Welcome back to the Daily Show, everyone. So grateful to see you here. When we look at the Bitcoin spot ETFs, they've done $2.33 billion worth of total volume. But what we notice here, the US markets have been closed since the 14th. So they've got a bit of catching up to do, but we did see before the markets closed there were inflows. And we've seen some inflows into spot Ethereum ETFs as well recently. Fidelity has been buying. The crypto market has been a little bit shaky. XRP has come down 3.19%. Solana has been hit. Looking into the memes, Pepe is up 4.82% and Trump is down nearly 10%. And someone let the air out of Fartcoin. Oops, sorry about that. DeFi is just a little bit mixed, but more green than red. And Solana is definitely leading up the back of the pack. It's probably not surprising that ETH has finally started to turn around. And one thing to note, Solana was the Ethereum killer and Ethereum is taking revenge. Looking at the DXY all the way back to 2012 on a daily basis, what I've done here is to put the daily exponential moving averages, the 200, which is that thickest line underneath, right up to the 12, which is the fastest moving and most reactive EMA. A lot of people like to look at EMAs and SMAs. I've also put the RSI on. Now, what can we tell here? From the RSI, the DXY is losing upwards price momentum. We see this from time to time. And when it does, what we also seem to find from past behavior is that the DXY can continue to come down. One thing just to note, with these EMAs, they just represent a moving average over price and weight more recent periods more than later periods. That's all an EMA does. Investors and traders will look at EMAs and SMAs to give them some sort of signal as to where market structure may be. We've seen that these EMAs are acting as a level of short-term resistance on the DXY. But is it possible to predict where price might go before price actually sells down or pushes up? The answer is yes. As a community, we mark up our charts with level 1 and level 2 standard certification because we understand all of price is structurally bound. What we're seeing here at the current time, the DXY currently 106.7330 is following the normalized negative price path. This means it's lost its structural support and it's going down to lower structural support levels. If the buyers come in, it can reverse course, so just always understand that we can leave one path and move to another path. But it literally depends on what the cheat sheet is doing. One thing to note, this particular price path was not just drawn up today, it was drawn up back here on the 5th. We just let these price paths play out from a normalized perspective. So we can see there's negative pressure on the DXY from a structural perspective, and it is negative. Now, what does this mean to the stock market and also to the crypto market? When looking at the stock market, looking at the S&P 500 is a pretty good idea. We put the daily exponential moving averages on from the 200 all the way down to the 12. And you can see what EMAs do and what SMAs do is just to marry price up with a plus and minus. So it's creating an average. The idea is around normalized price conditions, you can get a bit of a perspective on where the trend might be going. So if we just drill in here, what are we seeing at the current time? Well, we're seeing at the current time that the S&P 500 is very nicely supported. In fact, in the last trading session, it came up to the previous all-time high almost and just backed off. That is what I call some pretty bullish price momentum. Where is it getting it from? It's getting it from the decay in the DXY and also the VIX. If we zoom in a little bit further, we can see that those daily EMAs are creating what we might call dynamic support. But where is the resistance? Because it's getting up to a previous all-time high, there is no resistance. It's all price discovery. Correct? No, incorrect. There is always resistance inside a market. It's either strong or it's becoming weak, but it is always there. When looking at the S&P from a structural perspective, we can see it's overcoming structural resistance levels and seeking to go higher. It's currently leaving the normalized positive price path, and this is a pretty good thing. But always remember, price is always moving in a wave. And again, this particular path was drawn up on the 5th. It's put in to give us a guide as to where price is actually going from a structural perspective. If we zoom in to the S&P 500, we can obviously see there's something in there, but you can't see it through the daily EMAs. It's just not showing you anything. But what happens when we mark up structure with level 1 and level 2 standard certification? Immediately we see where the structure is inside the market. And we can see that it's very, very strong through that 61.14 level. But what about structure above the 61.14 level? We can see there's a bit of a gap. Now this is called a positive CTKS gap, which could mean if the S&P 500 really starts to take off, 61.80 is definitely on the cards. That means that this level of structure is a really important one to keep your eyes on. For example, if we start to lose that particular level, the next structural level is down here at 60.90, and there are further ones below. This is the actual structure of the market, and remember when I said it came up and nearly pipped the previous all-time high, it just missed it by just a whisker. So inside the stock market, there's a lot of positive price momentum. And if we can consolidate around this 61.14 level and then take off to the upside, it's looking really good. When looking at Bitcoin from this daily exponential moving average perspective, EMAs and SMAs always provide a degree of truth inside the market. They're useful things, but structure trumps everything. When we look into Bitcoin, what we can see when we just start from the start of February is that Bitcoin had a lot of negative price momentum and has pretty much flatlined. All the EMAs are showing there's a lot of negativity inside the market. But it looks like this candle is saying, I'm not so sure I realistically want to go down anymore. And if we see the US session open up and positive price momentum inside the futures, this will be really good for markets, especially the crypto market. However, one thing is really missing here. Even though we have some kind of concept as to what could be above from a daily basis, it would be great to know what the actual structure is. And we'll look at that structure a little later on. One thing that I wanted to just go through you, these halving dates here for the 2016 cycle, the 2020 and the 2024 cycle. After the halving, we saw in the 2016 cycle a lot of upward price momentum. It got a bit wobbly in the 2020 cycle and then it took off. Now we've seen a bit of a push up. So this is of course very healthy, but it's been digesting these gains. Literally, the top end of town wants to buy into especially Bitcoin. Sometimes it gets really confusing. Where is Bitcoin going? Why is it going the way it's going? When you look at row 1 and row 2 from the cheat sheet, it gives you an incredible insight. What we've seen just recently is the VIX and Bitcoin have an inverse relationship with each other. Now, what do I mean by that? If we invert the scale so the big number is on the bottom and the little number is on the top, what we can see is that when Bitcoin spikes up, the inverse Bitcoin chart also follows the VIX. Now, if VIX is spiking upwards, that means that Bitcoin is spiking downwards. And you can see this directional correlation and association. It's a very important one to look at, and the VIX is the dominating chart at the current time. And the VIX is influenced by the 10-year, by the 2-year, and also the DXY. So you can see these are all inverted charts because the large number is where the small number should be. It's upside down. Inverted charts can be a little bit tricky to look at, so that's why we have row 2, which are junk bonds, the euro dollar, the Aussie dollar, copper, silver, and gold. There is always a lag effect that plays out between the main markets and crypto. Remember, crypto 24/7 by 365, and the main markets yawn, yawn, yawn whenever they want to. Just kidding, 5 days a week. So what we see here is junk bonds have been coming down, and that's thrown negative price momentum inside the crypto market. Also, there's a fairly good association between gold and Bitcoin. It's a little bit laggy, but it's certainly there. And we've seen gold just recently do incredibly well. But over the past couple of days, gold has been coming down, Bitcoin has been coming down, silver's coming down, Bitcoin's coming down, copper's coming down, you got the idea. The Aussie dollar, not looking too crash hot, and the euro. Just think about the euro inverting the DXY in terms of directionality. Over the past 30 days, there's been $5.47 billion flow out of spot flows inside Bitcoin, Ethereum 2.5 billion, XRP around 310 million. A lot of money has been flowing into stable coins. From a spot perspective, we can see Solana hasn't really suffered that much. When we look at something like Doge, we're seeing negative spot outflows, but what are the perps doing, the perpetual futures? They're looking a little bit red. We can see that Bitcoin, 21.71 billion worth of outflows in the past 30 days. People have been moving their funds across to stable coins. So when it comes to net outflows on the perpetual futures, we can see 5 minutes, well, maybe we go for, let's say, the past 24 hours. That'll give us some kind of insight. We can see USDT and USDC, so a flow into stable coins. We can also note that Ethereum has done very well and ETH really spiked up recently. Why is this? Too many shorts. We've seen a lot of negative price momentum inside total crypto market cap. Now just bear in mind, this was done around the 3rd. Now around the 3rd, the crypto market absolutely melted down. But note this, by the 17th, it's come back to the normalized negative price path. That's how powerful these paths are. They're always structurally drawn, and you learn all about how to draw these up in Level 2 standard certification. Recently, Ethereum has staged a bit of a push up, but you can see it's still on the negative normalized price path. Even though it came literally down to 2100, it's back to 2700. It's back to the normalized negative price path. This is why the process of normalization and understanding it is so incredibly important. If you were drawing your paths to try to reflect actual price action, it would be down here somewhere, and you probably keep on going down, never realizing that normalization is real. And inside the service, I do these normalized negative, normalized positive, and consolidation price paths across every single chart in the cheat sheet. It is incredibly valuable information. One thing to also note, we look at normalized price paths for a very specific reason. We want to see where there's a change in trend. And when we look at BNB, we can see that it left its normalized negative price path on good news. What was the good news? The SEC said, we're going to back off. And what did that do to BNB's price? Because there were so many shorts inside BNB they had to cover. And by covering, they came up to the normalized neutral price path. But you can see structure still just controls everything inside financial markets. Getting an understanding of what's moving around in terms of categories is really, really good. Inside the crypto market, we've seen that all categories have come down in the past 24 hours, 2.5%. But we've got flows into the stable coins from all of the various subcomponents. And that is important to understand. Layer 2 has done particularly well. As a category, it's up 11.2% in the past 24 hours. Now, what is Layer 2? Well, here you go. This gives you an idea. Don't forget, the Ethereum ecosystem has been crushed down by so much shorting. And it's exactly the same thing, the shorts covering or getting liquidated, that will force Ethereum ecosystem right up again. So it's not surprising what we're seeing here. I'd like to thank Edwin, our beloved CTKS ambassador, who shared this article. Argentinian president faces impeachment over his Libra tweet on X. Ooh la la. And if you would like to share news stories with me, please do so. One thing to bear in mind, no alt can escape Bitcoin's gravity. What does Bitcoin's gravity look like? It's that blue line. You can see it moving around here. When Bitcoin starts to recover, the alts start to recover. When it comes down, the alts come down. It's very important to understand this intercorrelation between Bitcoin and the alts. And of course, you understand that Bitcoin and the major markets also have intercorrelation. On the top bank, we see Pepe paying out and WIF not paying out. Oh, naughty WIF. And Solana has also been pretty much hard hit. You can get an idea of short-term sentiment in terms of Bitcoin by looking through the liquidation heat map. You can see around the 94,563 level, there are a lot of longs hanging out there. But if we get above that 96,608, there's a lot of shorts hanging out there on the 12-hour basis. On the 24-hour basis, well, pretty much the longs have all been hit and then it reversed course. There's a lot of shorts hanging out around the 27,213. On the 48-hour, we can see that all of those longs just got whacked, but there's a few more starting to creep back. And we're seeing around that 97,307, there's quite a few shorts hanging out there. So if we get upward price momentum, the 97,300 level is definitely one to keep your eyes on. Now, how can you see these levels before you look at the liquidation heat map? It's actually pretty straightforward. You can notice this top here and this bottom here. Well, that bottom there is where all the longs put their stops, and this one is where all the shorts put their stops. Pretty straightforward, really. Literally no mystery to that whatsoever. Let's have a look at the 1 week. What are we seeing here? Yeah, you got some there, but it's up here where it's concentrated. So if we get upward price momentum, we could come back into the 100K zone. But if we get downwards price momentum, we could come back to around this tail, the 93,718 mark. But everything is dependent on structure. So many times I've looked at the interplay between the liquidation heat map and structure always wins. But that doesn't mean you don't look. Look, it's good to have data. Understanding how to read structure is an absolute game changer. So when we drill into Bitcoin, we want to know where the structure is and where things could change around. And the good thing to keep in mind, when we look at structure, we're actually looking at a forward-leading indicator of price. I'll just pop across a couple of values for you, and we can see that ever since Bitcoin hit this structural level at 98,384, it has been decaying. We know that Bitcoin's movements are being influenced by the VIX at the current time, from an inverse directional momentum perspective. And what we can see here, price just came up to the 96,493 mark and was rejected. That doesn't mean it's necessarily coming down to the 94,574. If there's further price momentum inside the stock market, we would expect and anticipate bullish price momentum. If the stock market gets really bearish and concerned, we would expect negative price momentum. When you understand intercorrelation and interconnection, all this becomes much easier. We know that we've just come through a negative CTKS gap, but the buyers have stepped in. This is really good. We would expect and anticipate a structural resistance level to play in at 96,493, and that will continue to play in for the duration of this month. Remember, these levels are dynamic. They change on a month-to-month basis. If we get negative price momentum, the 94,574 level comes into play. But just remember, there's a lot of positivity inside the stock market. Crypto sniffs out risk on and risk off behavior. It is far, far more sensitive than the stock market. If we overcome the 96,493 mark, we enter price momentum up to the 90.84. If we get bearish price momentum, we would expect price to be between the range of 93,432 and 94,574. All of these safety nets should come in and rescue and capture Bitcoin from going too much further down. Of course, unless there's panic in the market for some reason. It's important to understand interdependence because total crypto market cap creates interdependence between Bitcoin. Let's have a look at the structural levels. So when we look here, we can see that Bitcoin came this $3.19 trillion area, and then it did a structural failure. And because Bitcoin reversed and came up to retest its own structural resistance, we've seen the entire crypto market do the same thing. Unfortunately, we had structural resistance on Bitcoin and also on total at the same time. That's caused this forcing back of price action. If we get bullish price momentum, we need to get across this $3.16 trillion to go higher. Bearish price momentum could see the $3.05 trillion level just cut through. But just remember, Bitcoin has a ton of structural support levels below it. And this could be explained by the alts bleeding and cycling back funds into Bitcoin's structural support. If that occurs, you must always just bear in mind that in any particular 24-hour period, crypto is all over the place. It's coming down, it's going up, it's coming down, it's going up. It depends when you watch a particular video. What you just need to be aware of are the structural levels, the gaps between the levels, and also intercorrelation between charts. It does take a little while to just get your bearings on this, but once you've got it, you will absolutely act in a professional nature inside the markets. And that's really important because you'll find that the markets are incredibly turbulent, especially the crypto market. For example, back on the 3rd, Solana absolutely went for a nosedive. It came down to that 175 mark. It was up at 217 and it just absolutely cratered because of intercorrelation and interconnection inside the market. That's what the cheat sheet is for. It's to alert you to issues. Looking at the price path, we can see that the Solana came down to this 197 level, which was a good level of structural support, and it just hung out there day after day after day. It was rejoining the normalized negative price path, but we're seeing it even go more negative now. And don't forget, ETH is going up. Solana, the ETH killer, is not too happy with Ethereum currently. When we look at Solana from a moving average perspective, we can see that it's broken through the 200 period daily exponential moving average. This happens from time to time, and we typically get reversals around this time. So just be aware of that. As everybody is getting really negative, we may find that things improve, especially if Bitcoin starts to come up. Therefore, now more than ever, it's vitally important to understand where the structural support and resistance levels are, the true structure. Let's just zoom in to recent price action on Solana. We saw a down wave, an up wave, a down, up, down, up, down. Look, price is all over the place, but you just got to know where the structure is. Because if you find out where the structure is, it's literally a game changer. Okay, let's pop it on. So what we can see here is that Solana just fell through so many safety nets and entered a negative CTKS gap. Don't forget this is a 5-minute chart, so it's showing you how structure just pings price all the time. If we come down through a level, we anticipate and expect these safety nets to rebound price. But if they can't get above key structural levels and they fail structural support, they're going to the levels below. So it's vitally important to know where they are. I'll just pop across a couple of values for you here, so we can see that we're in that negative CTKS gap. If Bitcoin and total decay, that will take Solana down to the 170 and 10 cent mark. If we see a reversal in Bitcoin and crypto, Solana will have to inherit that positive price momentum and exceed that 185.60 and go beyond. But as you've seen time and time again, it depends where the structure is. It depends how price interacts with that structure. Does it do a structural failure? Does it do a structural pass? And we can see around that 185.60 mark, that is just a string of structural failures. Solana's price depends on Bitcoin and total, but it plays into its own structure as well. It is a very different way of looking at the markets, but it's the way professionals look at things. Retail would never ever look at something like this. They would just say, what's the level on Solana? Okay, it's 185, it's 170, I'll just go from there. There's so much more to it. But it literally begins and ends with structure. If you can master the structural aspects of the market, you are going to do incredibly well. And it's always useful to just keep in mind, price is always moving in a wave. If you understand this very fact, Rule 4, it is a game changer because most people just don't understand it. They get a prediction at a certain amount of time and they say, oh, that guy said it's going to go up, and it came down. But it went up 10 hours later or 2 hours later. Price moving in a wave is a literal game changer, but it requires you to think about certainty completely differently. Let's just quickly cover off XRP's structure. You can see the blue line. The blue line is Bitcoin. This is on a 15-minute chart. So when we look at this, we can see as Bitcoin goes, so too does XRP. But we also know Bitcoin and total are moving structurally aligned. They reinforce each other or weaken each other. And you can also see that as Bitcoin came up, it pushed XRP up as well. When it came down, it pushed XRP up and down, up and down. It is clear, it is a fact, and this happens to every single chart. It's just how overextended the up move is and how underextended the down move is. But it's always the same. It's always moving in directional correlation. Not necessarily perfectly like this, but directionally. For XRP, the levels to keep your eye on, if Bitcoin starts to recover, we want to get across this 2,710 mark and eventually that 2,728. We've got a positive CTKS gap up there, so that's looking rather good for XRP. That's the upside, but the downside is, if we start to lose that 2,615 level, the next structural support is at 2,556. But literally, Bitcoin and total will control everything today and for the next 24 hours. With the crypto market being so weak for such a long period of time, people are going through pullbacks, life pullbacks. Just one thing to just bear in mind, that life pullback will give you the strength for the next life rally. We all get pullbacks in life. It could be for so many reasons. But the thing to understand, you are always gaining strength. A lot of people just gain anger. Anger is a self-destructive trait. It doesn't suit you, it doesn't serve you. But it doesn't stop people doing it. In fact, the world is so incredibly angry. That's why positive excellence is a rule that we live by. It's all about understanding the long-term game, not the short-term one. We are accountable, and that means that we can learn. If we go through a pullback, we know that the sun will come out again. And if you're going through one, our love and healing thoughts are with you as a global family. Our goal as a community is to spread kindness, empathy, and care, and do so with tons of money. There is no nobility in poverty. It doesn't help anyone. So therefore, learning how to deal with the setbacks in life is incredibly important. The more successful you get, the more setbacks you will get. This is not a problem because the more rallies you get as well. I thought in the comments we could talk a little bit about kindness and empathy. These seem to be things that people don't have much of these days, and that's such a shame. And thank you for all your comments across the past couple of videos. We just have the most incredible global family. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.